All right, welcome to The Explainer. Today, we're jumping right into the high-stakes world of microcap investing. This is the space where you hunt for those little, overlooked companies that could have absolutely massive potential. But how in the world do you actually spot a winner? Well, it turns out there's more than one way to find a diamond in the rough. It really all comes down to a fundamental question. Do you put your money on a company that has a rock-solid, almost unbreakable financial foundation, or do you go hunting for a fantastic business that the market has somehow just completely missed, one that's trading at a huge discount? To dig into this, we're going to look at two real companies, and each one has a very different story to tell.
So, on one side, we've got the Fortress. That's Idaho Strategic Resources, or IDR. Their big claim to fame, a balance sheet that's so strong it's basically a financial vault. And on the other side, we have the discount. That's Brookside Energy, or BRK. Now, this is a profitable company that, for whatever reason, is trading at just a fraction of the price of its competitors. So two companies, two totally different ways to potentially hit it big. So here's how we're going to break it all down. First, we'll look at what these companies actually own, their core assets. Then, we're going to crunch the numbers to see exactly why one is a fortress and the other is a discount. After that, we'll explore what could happen in the future to unlock their value, and we'll finish up with a super important reality check on the risks.
Okay, let's dive right in. We're looking at two companies on two fundamentally different paths to creating value. You could almost call it the ultimate showdown, financial safety versus a huge market opportunity.
So what's actually under the hood for these companies? Before we get into any of the financials, let's get our hands dirty and look at their real-world assets. We are literally talking about gold mines in Idaho and oil wells down in Oklahoma.
First up, let's talk about Idaho Strategic Resources. This isn't just some idea on a spreadsheet. These guys are a real working gold producer. What you're looking at here is the team at their Golden Chest mine out in Idaho, and they are literally pulling gold out of the ground. But here's where IDR gets really fascinating. It kind of has this dual identity. On one hand, yes, it's a profitable gold producer, and a good one too. They grew their reserves by over 53% last year. But here's the real kicker. They also happen to control the largest land package for rare earth elements in the entire United States. Plus, they've got exposure to other critical stuff like thorium, copper, and silver. We're talking about the raw ingredients for everything from your smartphone to advanced defense technology. Now check this out, because this is wild. Look at the quality of IDR's rare earth deposits compared to some of the major global mines. Mountain Pass in California, that's at 1% concentration. Mount Weld in Australia, 3.2%. But one of IDR's samples, from a spot they call Sparky Mon, comes in at a mind-blowing 15.3%. That's not just good, folks. That is potentially a world-class, game-changing discovery.
Okay, let's switch gears completely. We're going to head down to Oklahoma and take a look at Brookside Energy. Now, even though it's listed way over in Australia, all the action, all the assets are right here in the US. And the most important thing to know is that this is not some wildcat explorer drilling dry holes. No, Brookside is an established producer with wells that are already pumping oil and, more importantly, generating cash.
So, Brookside's operations are centered in a part of Oklahoma they call the Swish Area of Interest. They've got a really solid base of about 12.5 million barrels of oil equivalent in reserves. Most of their production, about 60%, is valuable stuff like oil. Now, the asset quality is described as solid, maybe not the absolute best in the world, but definitely good enough to support years of drilling. And, on top of that, they've got this potential ace up their sleeve with an undeveloped area they call Riverbend.
So we've got a gold and critical minerals player in Idaho, and we've got an oil producer in Oklahoma. Now let's get to the main event, the financials. This is where you're really going to see the massive difference between the fortress and the discount. Let's start with IDR, the fortress. This quote from the source material really just says it all. In an industry that is famous for debt and messy balance sheets, IDR's financial health is considered exceptionally clean. So, what does that actually look like in practice? Well, first up, get a load of this number. By the end of 2025, IDR had over $73 million sitting in cash and investments. For a company of this size, that is not just a safety net, that is an absolute fortress. And here is where that fortress idea really slams home. They have all that cash, and their total liabilities, just $5 million. That is an unbelievably secure financial position. They owe almost nothing to anyone. But don't you dare mistake that safety for a lack of growth. In 2025, IDRO grew its revenue by nearly 65%,
So think about that. You've got this incredibly safe balance sheet combined with explosive growth on the top line. That is a very, very rare combination.
Okay, now let's flip the coin and talk about Brookside. Its story is totally different. We are not talking about a mountain of cash here. No, the whole investment idea is built around this massive perceived gap between what the company is actually worth and what its stock is trading for. It is a classic deep value play.
Now this is the slide that tells the whole Brookside story. We're looking at a metric called EV to EBITDA, which is just a fancy way of comparing a company's total value to its earnings. Now look at Brookside's direct competitors. They're all trading at 4 to 5 times their earnings. The average is over 5. But Brookside, it's sitting way down here at just 1.66 times. What that means is, for every dollar of profit it makes, the market is valuing it at less than a third of what its peers are worth. That is a gigantic discount.
So we have our financial fortress and we have our deep discount. But a stock price doesn't just go up on its own. What could actually happen to change things? What are the triggers, the catalysts that could make the market wake up, take notice, and potentially reprice these stocks higher?
For Brookside, the path forward is actually very clear, and it's driven by specific events. First, they're pushing to get their stock listed right here in the US by the first half of 2026. That would finally put them in front of American investors who actually understand their assets. Second, they're buying back their own stock, which is a great, tax-efficient way to return cash to shareholders. And third, any good news from their Riverbend exploration area could add a ton of new reserves to their books.
Now for Idaho Strategic, it's not really about one big, flashy announcement. Their path is all about steady, consistent execution. They basically just need to keep doing what they do best, hit their gold production targets, keep developing those incredible rare earth assets, and of course, ride the wave of what have been very strong prices for gold and other minerals.
All right, it's reality check time. Of course, no investment is a sure thing, and that is especially true in the microcap world. To get the full picture, we have to talk about the risks. So what's the catch? What could go wrong for these two companies?
For Idaho Strategic, the main risk that's been highlighted is rising costs. Their cost to produce a single ounce of gold jumped by over 28% in 2025. They absolutely have to get a handle on those costs to stay profitable. For Brookside, the risks are different. First, as an oil producer, their fortune is directly tied to the crazy, volatile price of crude oil. And second, that all-important U.S. listing has already been delayed once. Any more delays could really start to frustrate investors.
And that brings us right back to our final question. We've laid out two totally distinct paths to value. On one hand, do you prefer the safety and the growth story of a financial fortress like Idaho Strategic with its perfect balance sheet and its world-class mineral potential? Or are you more drawn to the deep value idea, making a bet that the market will eventually have to close that huge valuation gap for a company like Brookside Energy? It's two different stories, two very different bets on value. The question is, which one do you find more compelling?